चलिए बिस्मिल्लाह. Okay, previously we have discussed about what is management. We have also discussed how accounting is different from finance. Why we need managerial accounting. We have studied how financial accounting is different from managerial accounting. Later on, we have studied some classification of cost. We have studied manufacturing cost, non-manufacturing cost. We have studied fixed and variable cost, and we have also discussed why we need these two costs. What are the rationales that we need to have, or we need to measure fixed and variable cost while we are having information about direct and indirect cost. And I discussed that we need direct and indirect cost to examine and measure the cost in per unit, and our rationale is to set per unit price. But sometimes we also encounter the issue about volume of production and how much we should produce to achieve economies of scale. What is economies of scale? The economies of scale concept comes from economics. It means the more you will produce, the best maximum benefit you will achieve. For example, if you're going to a market and you're purchasing 1,000 units, you will be in a good negotiation power. But if you're purchasing 100,000 units, your negotiation power will increase. So that's what the economies of scale concept is. The more you will produce or the more you will purchase, the maximum benefit you will get. Okay, so that concept is basically applicable in fixed and variable cost, where I have explained you the example of bicycle. That the fixed cost will remain same in total, but will change as the level of activity will change. And variable cost will remain same in per unit, but increase in total as activity level will increase. So now we have some cost classification for decision making purposes. In many of our cases, our life decisions, our business decision, we come up with so many options. As I started this lecture with an example that you have decided to enter into MBA. Why? Because you determined its effectiveness. But what was the process of that effectiveness? The first step was planning. You planned. Why you planned? Because you were having different alternatives. And similar is the case with the business. To determine an effectiveness, that okay, chairman, you are in a chairman of board meeting, COB board meeting, and you are a production head, and you claim that, sir, we should start this production. Or sir, we should purchase this machinery because we have to export to France, and the ISO certification of France need that particular thread from that machine, and then we can export our garments to that particular region. But they say, why we are going to France? We have other alternatives. And other countries who can still accept our material being produced from the same plant or same machine we have. Why only for one country we should install a new machinery, new plant? Then you will come up with some cost benefit analysis. Okay, so now we are going to study another type of cost in which we will study that how to decide between alternatives and what are the hidden costs of different alternatives. Is it clear, bacha? Okay. The first one is differential cost and revenue. What is differential cost? A differential cost is basically a difference of cost between the two alternatives or two outcomes. Let me give an example. Like he has given an example that, for example, you are a Jhang based, I'm a Multan based, and he's from Kamuki. If I'm blessed to have a job in Multan, which is paying me, for example, $150,000, but another job in Lahore is paying me $250,000, which I will prefer? Well, this is a very simple differential cost. But commuting will be another. If I'm coming to Lahore, definitely here, there I have my own house. I don't have to pay rental expenditure. I have a huge family. I have a single kitchen. All that stuff I will save myself. And ultimately, I have to compete. For example, I have to rent a house of 35,000. I have to bear a traveling. Multan is a small city, and I can move around easily. I have my own father car, which I can use for transportation. But here I have to manage a car. I have to manage my family transportation as well. For example, if I add up everything, so my commuting cost turned out to be 90,000. So it means I'm shifting only for 10,000. Does it make sense or not? That is a differential cost. When you are stuck with the alternative, sometimes an alternate seems fancy, fascinating. Again, overhead. You can see it is an overhead, which is not apparent. It is there. Coming all the way from Jhang to Lahore maybe will be fascinating for you in this age, honestly, because by living in that suburban town or a town, Lahore is a quite a place of enjoy and where you can hang out with your friends and you can enjoy the company. But definitely, once you have a family and you have a responsibility and you have to look the finances, then you'll say, okay, why not? I should stay in Jhang. I can stay close to my family. My family is there, my siblings are there, and I can enjoy the life. So even that economics of happiness comes here. You're saving 10,000, but you're sacrificing so many best buddies, your childhood buddies there, with which you have spent your quality childhood. So that is what differential cost is. That when you are deciding, so it was very emotional side of this concept, coming up to the very generic. For example, you are working in town A and some metropolitan city has offered you another job. So you have simply subtracted that salary from this salary and you got an idea that I'm saving $500. I'm earning more than $500 from this new job. But then you added commuting cost, you find out, no, I'm only getting $200. But even in $200, you are traveling. You, you must add 2 hours of daily traveling in your job, working hours. So is it advisable to go there? Is it wise to go on a new job, or should we forego that and continue with the same job? I think continue with the same job. So that is the concept of differential cost and revenue. Okay, so when you are deciding based upon the revenue, you must add differential cost as well to get a clear picture. Should we go for that decision or not? Simply saying, once we were saying in our previous class, previous section, that Amazon has ordered Rida to produce 5,000 units, and she was happy, overjoyed. I, I did it. I can do it. But when she came to the chapter of fixed and variable cost, she came to know, no, it's expensive. I'm losing. I'm losing almost 5 million rupees, which is a big chunk. Then she started convincing them because initially she was just relying on differential revenues. Later on, she came to know the differential cost as well. So, differential cost is a cost. I will be very simple here, beta. When opportunity knocks you, do not be that shallow to decide. Go dig deep. Find out what is the hidden cost, and that is a differential cost. And you must decide based upon that differential cost. Okay, so this is the best example I can give you. Another cost which affect decision or which basically help you in deciding between different alternatives is opportunity cost. What is opportunity cost? Opportunity cost is basically a cost foregone to for an opportunity. For example, if you are doing MBA here, there are many foregone opportunities. You must have been doing something else. Maybe you were doing your own business. Maybe you were doing your own agriculture, or maybe even hanging out with your friend or doing something. You're paying so many costs while you're sitting here listening my boring lecture, tolerating me, okay, and maybe you will be saying Allah Akbar, Master the Junk project. That's all depend upon you. But definitely you're paying so many costs sitting here. That is opportunity cost. Let me give you a business example. You are going to start a business. Maybe you inherited some money from your parents and you said that no, I will not do a job because job is not a thing for me. I'm not a suitable guy for job, so I should start a business. So here you have two alternatives, either to go into pharmacy business or to go into the food business. You thought that I'm living close to University of Lahore. I've been studying in University of Lahore, and I have observed that more than 30,000 students is studying here. It is a huge market of youth which like fast food, and there is no quality fast food restaurants. So I should come up with some theme, some unique theme to attract these at least 5,000 out of the 30,000 clients who are residing in hostels in nearby area. But eventually you thought, no, there's a 3-month break. I will be sitting idle in that 3 months. Then your friend said, look, there is one industry which even was booming and enjoying growth even during COVID, and that is pharmaceutical industry. Why not you should open a store? Because there are new towns opening around Lake City, other. You should come up with some first mover. You should get some first mover advantage and open a pharmaceutical company or at least a store nearby localities. So now you have two alternatives. If you are going to that, you are foregoing this, and if you are choosing this, you are foregoing that. So if you are choosing one opportunity, you are foregoing or you are losing a chance to get another opportunity, and that opportunity is basically a cost of this opportunity. Getting my point? No? If I'm here, I could have been on other places. I could have been doing so many things. Those things which I'm not doing right now to do this particular thing is opportunity cost. The cost of availing one opportunity, and that cost is the opportunity which I have foregone. जो आप नहीं ले पाए, that is opportunity cost. For example, if you are not attending college, you could be earning $15,000 per year. Your opportunity cost of attending a college for 1 year is 15,000. For example, there is a KFC now. You did your BBA from here, and you are planning that I have, Allah forbid, you have a financial difficulty, and you thought that I should start working on KFC, and they are paying you 40,000 per month. But instead of joining that KFC, you decided, okay, no, I will bear my financial difficulties, and your family motivated you to join this MBA. Okay, so now that 480,000, which were you are earning from KFC, is an opportunity cost of your MBA as well. The fee, the amount you are paying is not an opportunity cost. That is a cost of this degree. The opportunity cost is that 480,000 which you could have earned while working in KFC is your opportunity cost. Clear? So these two costs helps you in deciding between alternatives. And the third is a sunk cost. The cost which is sunk. The car you have purchased. Sunk cost cannot be changed by any decision. They are not differential costs. They should be ignored when making decision. You bought an automobile that cost 10,000 2 years ago. The 10,000 cost is a sunk because whether you drive it, park it, trade it, or sell it, you cannot change the 10,000. मतलब वो हो चुका है. Now it's useless to cry over split milk. अब पछताए क्या हो जब चिड़िया चुग गई खेत. The first is differential cost, second is opportunity cost, and third is sunk cost. Differential cost was a time when you were choosing between the two alternatives based upon their revenues and their cost. Opportunity cost was a cost where you were comparing two opportunities. And if you are going with one opportunity, then the second was the cost of this opportunity. And third is the sunk cost. जहाँ पे आपको मुतमईन कर रहे हैं कि होना हो गया और बर्दाश्त करो फिर आप आ गया. Clear है? Getting my point, बच्चे? This is a check. Suppose you are trying to decide whether to drive or take the train to Portland to attend a concert. You have ample cash to do either, but you don't want to waste money needlessly. Is the cost of the train ticket relevant in this decision? In other words, should the cost of the train ticket affect the decision of whether you drive or take the train to Portland. Let me make it very simple for you. There's a huge increase in petrol prices in Pakistan. I'm a frequent traveler to Multan. Initially, it was costing a round trip was costing me around 14,000, sorry, 12,000 rupees. Now it's costing me around 25,000 rupees on my personal car. So whenever my family is not traveling with me, I prefer to go to bus. So does the bus ticket price matters in my decision? Definitely. They are charging me 2,000, but if any day they say we will charge 5,000 and a round trip is costing me 10,000, then I will prefer to go to my own car. And I will ask my wife to go with me because the round trip for both of us is 20,000. So why not I should go with you and I have to pay only 4,000. In exchange of that, I have a luxury of my own vehicle and I can drive with my own comfort. Okay? So yes, matter. This is a example. Yes, the cost of the train ticket is relevant. So this was the example of opportunity, differential cost. Okay. Okay. So now here is another example. For example, suppose you're trying to decide whether to drive or take a train to Portland to attend a concert. You have ample cash to do either, but you don't want to waste money needlessly. Is the annual cost of licensing your car relevant in this decision? जिसे आप टोकन कहते हैं, गाड़ी का टोकन. Does this matter here? वो तो आपने पे करना है, चाहे आप जाएं ना जाएं. आपकी गाड़ी 1 किलोमीटर भी ना चले, you have to pay because that is not in proportion with your kilometer driven or your car driven. That you have to pay annually. Either you are driving, either it is in your abundant in your garage. You have to pay if you are a registered taxpayer. So that is not relevant. So basically these three costs, differential cost, opportunity cost, and the third one, sunk cost, also help you in understanding which cost is relevant or which cost is irrelevant to decision making. Okay, another cost is a product cost and period cost. This is the last cost. Why we need it? We need it to decide, look at me. There is a cost which is related to production process. And there is an amount of cost which is not related to production process or which is related to production process, but that cannot be traced from a production. That you can trace after a specific period. Remember my first concept, direct material, direct labor, overhead cost. I told you one thing, that you cannot trace that material or direct labor of that guy who is managing cash, a guy who is cleaning, and even you cannot estimate on daily basis after specific time or maximum at the end of the day or at the end of the month, once utilities will be arriving, you can access, oh, okay, so our total utilities are 30,000, we have sold around 40,000 or 30,000, so 1 rupees overhead against 1 chapati. Okay, so that is a period cost. There are some costs which are in a production process, but they appear after a specific period of time. So example, product cost include direct material, direct labor and manufacturing overhead cost, and period costs are not included in product cost, they are expensed on the income statement. Apparently they are expensed on a income statement. Getting my point? Let me explain from here. Product cost is a cost that is incurred and go into current asset inventory and then go into cost of goods sold. And from here it comes to COGS. Whereas the period cost is a cost which comes under expenditures and we subtract it from the gross profit. Selling and administrative cost. You consider it as expense. Getting my point? Manufacturing cost was comprised of two things. Direct labor, direct material. Sorry, I explained one thing wrong, I should admit here. Not manufacturing overhead is a period, rather selling and administrative expenses are period. I confused that. Manufacturing cost was comprised of three things: direct labor, direct material, OH. That is a product cost. Selling and administrative expenditures are prime cost here. So this is total product cost, manufacturing cost, and from here we will get gross profit, and then we will separate selling and administrative expense, which is a prime cost, and they considered as expenditures. Clear है यहाँ तक? चलें जी.